G'day everyone, hopefully you've had a good week. Just a quick update from us here at Future Accounting. Been another busy one, particularly working through our annual review meetings still. Starting to combine those with tax planning meetings as well, which has been good. So, as we've said before, these are what we consider some of the more important conversations we have with clients during the year. Not just about looking at last year's numbers, but really focusing on the future, making sure your structures are still right, your assets are in the right entities, and you're set up properly for the future. And at the moment, it's probably more important than ever. There's a lot going on in the world. We've got ongoing geopolitical tensions. We've got wars impacting markets. We've got economic uncertainty and constant talk about tax reform as well. So there's a bit going on. None of us can control these things, but what we can do is make sure our financial position is strong and flexible, so we're prepared for what comes next, which is what these annual review meetings are really all about future-proofing family businesses so they're protected and positioned well for the long term. Now, turning to this week's articles in the newsletter. So the first article is looking at commercial versus residential property investments from a tax perspective. This is a question we get regularly, which one's better? The second article is a bit more interesting. It looks at capital gains tax on classic cars and other leisure type assets. So we're seeing a lot more of this happening, and there's probably an assumption that because they're more like personal assets, it's all tax free. That's not necessarily correct. So if you have got those or looking to get involved in those types of assets, have a read of this just to get a bit better understanding from a tax perspective. Third article, pretty boring, but just looking at the GST reform. The 10% tax rate hasn't really changed. GST's been in for almost 26 years, so I guess as part of this whole tax reform conversation, GST is on that agenda, but will governments have the courage to actually tackle this one? GST is a consumption tax, so in theory, the more you spend, the more you pay. So that makes a lot of sense as opposed to, taxing people for working hard and trying to be successful. I think, hopefully at some stage there's a real good discussion and work done around tax reform because it is needed. Also check out the important dates link for upcoming lodgement and payment dates. That should be up to date now. If it's not yet, we'll be making sure that's updated during the week. So we're probably trying to, we talk about a lot of things that we're doing, a lot of tax concessions, tapping into those exemptions and so forth. But we're doing that on a weekly basis, and it is protecting a lot of equity within family businesses. In most cases, it's millions of dollars taking advantage of what's on offer now. So, we do really encourage anyone who's got a family business looking to transition that through to the next generation, or alternatively just get things set up for maybe a sale leading into retirement in the future. We really encourage you to come along to an annual review, talk through those, because it's incredible what is on offer now. And as we keep on saying, these concessions are very valuable, and I think as part of this whole tax reform process at some stage, there will be changes made, whether that's to the capital gains tax, whether that's inheritance taxes. All these things are probably going to be on the table at some stage. Thanks for watching, thanks for listening, and we'll catch up again next week. Thank you.